Finally, Vanguard Super Fund was released 2 weeks ago. In this video, let's take a closer look at this new super. Just a brief introduction of Vanguard before we dive into it. Vanguard is one of the world's largest global investment management companies, founded in 1975 by John Bogle, who created the first index fund available to individual investors. His mantra of buy and hold the entire market has inspired many investors, especially the people in the FI movement.
Jack Bogle has probably done more for the American investor than any man in the country. And Jack, could you stand up? There he is.
And Vanguard offers more than 75 funds in Australia versus more than 400 funds globally. Not only Vanguard's index funds are very popular among retail investors, it also has a large institutional client base, and many super funds, insurance companies, and robo-advisors use the Vanguard's ready-made mutual funds as their building blocks to package their investment products. Now, let's have a look at the Vanguard Super that was recently launched. There are 3 types of investments you can choose from: the life cycle, diversified, and single sector. The life cycle option allocates a certain percentage of growth and defensive assets to your super based on the risk tolerance, as younger people typically have a higher risk tolerance due to the longer investing horizon, and the allocation ratio between the growth and defensive starts at 90 versus 10, and there's a marginal increase every year allocated to defensive investments, and ultimately by age 82, the life cycle would have 40% growth and 60% defensive investments. The investment building blocks for growth would have Australian shares, international shares, both unhedged and hedged, international small companies, and emerging markets. We cannot tell what exactly mutual funds as the underlying holdings, but it would make more sense to use Vanguard's existing index funds, such as Australian shares. I would assume that they use VA as a wholesale fund, and Vanguard Index International Shares Wholesale Fund will be the underlying fund of international shares. Under the second investment option, diversify, there are 5 types of options: high growth, ethically conscious growth, growth, balanced, and conservative. And high growth, balanced, and conservatives use the same building blocks funds to build the portfolio, except the conservative option has 10% cash. And Vanguard is very considerate to have an ESG option, which is the ethically conscious growth option, in which they use ESG-oriented international shares, Australian shares, and global bonds as the building blocks. As ESG investing becomes more and more popular, investors who are ethically conscious will be reluctant to invest in any companies that involve with fossil fuels, alcohol, tobacco, gambling, weapons. So none of the funds in this option includes any companies that involve with those activities. If the above 2 options provide you with a diversified portfolio, the single sector allows you to allocate your contributions into one single sector from Australian shares, international shares hedged, Australian bonds, global bonds, and cash. I haven't joined Vanguard Super, but I assume that you can make up your own asset allocation to each one of the single sectors, just like how the other super funds work. From the objective under each single sector, we can work out what underlying fund they are using, therefore figure out the past performance. So far from the investment options, it looks pretty straightforward, but I care more about the fees. I made a video about super funds that offer index options in May. To put things into perspective, let's compare the diversified growth option of Vanguard Super and the indexed diversified option from Australian Super. Vanguard set a flat yearly fee including admin, investment, and transactional fees altogether from 0.39% to 0.58%. And within the administration fee of 0.35%, 0.3% of your account balance per year is charged up to $850,000, meaning you won't be charged this fee on the portion of your balance that exists $850,000. And outside of the bundled yearly fee package, there's an activity fee due to the buy and sell spread when any buy or sell activities occur, such as when you make contributions, withdraw from your account, or switch between investment options. And these fees range between 0 to 0.13% of your account balance, which you can find the actual cost from the underlying fund. And Australian Super charges $1 per week admin fee plus 0.1% of your account balance, capped at $350 per year. The total investment transactional fee is 0.14%. If we compare the total fees of account balance 50,000, Vanguard Super is still about $110 more expensive. Account balance of 100,000, Vanguard Super would charge $270 more. If we go up to 200,000 account balance, the yearly fee would double the fees of Australian Super. So in terms of fees, Vanguard Super doesn't have many advantages. Although it's still not 100% transparent of the underlying funds for each investment option, it makes more sense Vanguard Super options use its existing index funds as the building blocks. At least the single sectors are all index funds. However, for like random fee comparison with one of the biggest industry super funds, Australian Super, Vanguard Super Fund is still on the higher side. But if you're looking for ESG index option for your super fund, Vanguard probably is the only super fund has this option. So what do you think of Vanguard Super? Do you consider to switch to it? My name's Irene. I'll see you next week. Bye.